Shadim Shuri. Morning, Thursday, October 17, 2024. All right, let's go through another slew of beaten up tax loss selling stocks that might be worth buying. First up, LVMHF. It's an ADR, so it's a French company. It is the ultimate luxurious brand that you can buy as far as consumer discretionary. Louis Vuitton, you know, Tag Heuer. I mean, like I said, it's a hodgepodge of expensive luxury stuff, from handbags to watches, even cruise line. I believe. I think one of the cruise line they own. It's all kind of stuff, perfume, you name it. But it's luxurious, big name brand, right? Not the kind of stuff that are cheap, and you can gauge the high-end consumer sentiment by looking at how the stocks are doing. They have earning, I believe, Tuesday. There's the big dump. Weakness. They of course came in under guidance and guided lower, citing weakness in Asia, specifically China. Is that a surprise? All right, I have mentioned this stock a few times in the past. Thus, there is already lines. It's a stock that I have never traded, but I am considering buying anywhere from 5 to 10 share here. This is the kind of thing. It's an expensive stock, but at the same time, it is down 40% plus. All right, so yeah, plus it's at support. It came down to support. Let's go back 3 years and see. Okay, all right. No doubt. Is this, see, it came down to reference low, like a zone, right? Not a random spot. We can even draw in the zone. Let's do that. I don't know if it's gonna come back into that same zone again, so it might be worth a buy here, but for now, let's go back even further. Let's go back 10 years. Okay, looking good. It's a big channel that we have right here. Okay, the big channel. Let's go. There we go. All right. So you have something that is a down channel right now, and it definitely tests the ref low and the down channel and bounce. I like it. I like it here. Go back 3 years. Look where it was last October. Would you believe that a year ago it was right at the ref low? A year ago. So buying a few share a year ago, by Christmas, by year end. So if you buy at year end, let's say for argument's sake, you paid 690 ish, okay, or even 700. Let's even give us the benefit of a doubt that we did not pick the bottom. By Christmas, $100 plus. Ain't that nice? Pay 700, get out 800. That's nice. I mean, it's not 20%, right? Let's get real, but it's 10% plus. So if you want to throw some money into the stock here and now, there's no options. Okay, it's like I said, it's an ADR, so it's not heavily traded. What I would throw in an order where 640 down to I will throw in a bunch of orders in the 640 down to the 625 range. And if I get lucky, so be it. I will grab 5 to 10 shares down here. Now, I wouldn't chase it here, but there's a chance to make 10, 20%. I don't mind. No need to chase it. There are better opportunities to get 20% or better. 10% is nothing to sneeze at, but let's look at other opportunities. All right, so that's one. AAP, the dog. Now, this one definitely had tax loss. Okay, so you're talking 88 was a high, and you're talking chop in half. All right, more than half. Right, so yeah, if you don't think there's tax loss here, you're smoking something. All right, so I like it here. It's let's go back 3 years. Okay, this is one of the ugliest chart that you're gonna see. Go back 10 years. Yeah, I mean it's horrific. I mean the company had one of the worst misstep in management anyone can think of. Yeah, 20 years. You're talking 20 years low, right down here. Insane. Horribly managed company for 20 years. It was doing good, but since the pandemic, horrific. Okay, horrific. It's the good news is they cleanse management from CEO to CFO, the board, you name it, activists, you name it. It's in here trying to fix this company. So what I buy here, no rush. Okay, like I said, this is one of the ugliest stock in my portfolio. The biggest mistake of last year. Now you can see the 20, right? Resistant, try, fail, resistant, get over there, fail. Okay, so this is the second time that it got over the 20 and failed swiftly the next day. If this thing can get over and hold the 20, then it's a go for me. Okay, I'm not even gonna waste my time buying 5 share, 10 share. I go all in, 100 share. I take it. In the meantime, I would let's see is it any option action? Most likely monthly option. October. Yeah. Oh, there's weekly option. How nice is that? Okay. Okay. All right. 37.5. Most likely can get, depend on what's going on today, 15 to 20 cents. That's not a bad play at 37.5. Okay. Now, if I was beaver to grab 100 share right off the bat and just move on and not squabble over 10 cents here and there, 38 likely to get 30 cents. Let's see what it is. 38. Yeah, I'll go with the 38. That would mean that my average cost, if it gets assigned, would be 37.7, something like that, like down here. I like that. I like that play. Okay, the selling a naked 38 puts. I like that. Now, if you're aggressive, you can do a 39 puts and say, give it to me. I'm done chasing. I'm done playing. Okay. Let's see, the 39 is 75 to 80 cents. Yeah, that's aggressive. But that would mean that your cost would be about 38 too. Right? Down here. Like I said, yeah. Either 38 or 39 naked puts is the play that I would probably pursue, as well as buying share. Okay, if I might even sell a 38 puts, but between now and Friday or next Monday, if this thing, okay, the 38 put is going to expire in 2 days. So it's not like there's a whole lot. So by Friday, if this thing stay above 20 MA, then I go in there and buy my share and be done. But I like the 38 naked puts. I like that. Or even 39. EW, the dog of the Met device. I like it here. I like it here. All right. So once again, you have a stock that is chopped 30%. Tax loss selling, absolutely. Especially when it was in the 80s up until July, mid-July, last earning. So a lot of trap money here. A lot of trap money. Okay, lots of trap money. But the fact that it has come up above the gap down high and used that as a support. See, it came down, gap down, and it has used this as support instead of the, you know, if this right here, this spot right here is resistant, that's a different story. But the fact that it turned into the level of support, I like that. Okay. Would I sell puts here at 65? Yeah, I would. Okay, certainly not one of my favorite play, right? Is that this is just one of many examples that I think if you buy here or take long bets here, whether selling naked put, selling put spread below, or buy a few share, the risk reward is you likely make money. But this is not one that I say, oh, I can see 20% gain here, because even 10% will get you into serious resistance. Okay, serious resistance, the 100. So it's a 20% move would be, yeah, it's a long move. Not it can be done. Okay, this thing can move. Okay, it has moved 20% before, right? That's the kind of move that you see 20%. So I'm not saying it's impossible. It won't hurt to buy a few share and see if you get the kind of move into the 200 MA, right? That would get you the, not quite 20%, but yeah, it's not my top 10 picks by far when it comes down to buying tax loss. I'm just showing you that it's another 10% here, right? Last for today, MOS, ugly, 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 ugly trend. My goodness. When it comes down to commodities, fertilizer is not fertilizing. My God, let's go back 3 years. Goodness gracious, that's how ugly can you get, right? That is just an ugly 3-year chart. Forget tax loss last year. It's been nothing but a downward trend. Yeah, Ukraine war, okay, all that nonsense. This is pure Ukraine nonsense. Oh my God, Ukraine is one of the world's largest manufacturer, producer, exporter of nutrients. Well, guess what? Nonsense. Utter nonsense. If you don't believe me, go back and Google 2022 headlines about Ukraine and fertilizer. Absolute garbage. Not one of those manufactured nonsense. All right. This is one ugly, ugly company. Okay. I used to trade this sector pretty heavily, but not in the last decade. And thankfully, hey, I didn't catch this. I didn't catch this nonsense from the pandemic low. Okay. That was easily the play. but I completely took the ball off the the eye of the ball in this sector, and I follow it during the Ukraine thing. At the start of the Ukraine and the big move, I'm just like, this is nuts. And but it is at, if it keep going down to the low 20s, yeah, this is not the kind of stock that I would buy and say, oh, by Christmas you get 20%. But it's the kind of stock that if it get down to like 22, 21, even 20, I would buy. And I think in a year you can get 50% return. It's a kind of stock that, one day, wake up and see it on the news. Biggest gain for the year, Mosaic up 50%, something that crazy. Yeah. So it's a long play, right? It's definitely not a short play. If I buy it here in even the ref low, okay, channel low, 23, low 20. It's not a kind of place that I don't mind parking, buying 100 share and just leave it. That $2,400 investment can turn into a $3,600 investment in a year. Boring kind of money, but at the same time, I think the risk reward is low. But it had to be a long play. It's not the kind of thing when you buy it here at 24, 25 and say to yourself, oh, it can be 30 by Christmas. Not impossible. Okay, I'm not saying that you can't get a 20% return by Christmas. I'm not saying you can't, but at the same time, it's not the kind of play that it would be shocking for me to see it hit the 200 MA. Look, the last time it touched the 200 was way back in last year, December. Yeah, can you believe it? It had not seen the 200 since last December. So yeah, it would take a major move to get it back. But I like it here. Okay, I don't hate it here. It's definitely not in my top 10 dogs to buy right now, but it is definitely on a watch. If I see anything, in fact, instead of talking about it, I'm gonna put an alert right here. Below 25, I'm in. Okay, for long-term play. 25. There you go. Buy. There you go. About option, let's look at, before I go, look at options. 25, not enough juice. There's weekly option. 25 next week, next Friday. That's nice. I think 20 cents. Yeah, I do that. I wouldn't mind owning 100 share below 25. So yeah, for me, the play right now is just a sell like a naked 25 put, right? And if you even a bigger scary cat, then do a 24.5. You might get a dime or better. Okay, 24.5. Yeah, that's about as low as you can go. Okay, 24 it has no juice, but to me, 25 for 25 cents for 20 cents or better is not a bad initial play here. And if it get a sign, it's not bad. Okay, it's not bad. Sure, I would love to buy it lower, but I don't know if it has any more weakness to go lower. Early September Labor Day move might be the bottom. Okay, just because it's tax loss selling, the bottom can happen in September. So it is definitely on watch. If they come down to the ref low here at 25-ish and hold between now and the end of the month, that means that the bottom is here. I think it is, but it will confirm it between now and the end of October. So selling a naked put at 25 is not of risky play. That's it for today. We'll come back tomorrow with another slew of potential